And good evening, good afternoon, and good morning, ladies and gentlemen. This is Dr. Greg McLeod here from the Elite Traders University. It's time for another edition of Bulls versus Bears, the weekly Forex forecast. So good to be with you here, and we are going to go deep into the economic calendar and the technical picture for this week, the week beginning August 21st, 2023. I hope you're doing well. Hope you had a great weekend. Hope you stayed cool out there. It's been quite warm and across the country, across our nation. Some places we got some torrential rain. Again, prayers and well wishes to our family in Maui, to our friends and family there. Keep them in prayer. Make sure that are able to help out by giving a charitable donation via the um, the United Way or with the Red Cross, or we're even doing something with our back to school sale with a portion of the proceeds be given to Maui charities to help them recover from the fires there. Okay. So anyway, moving right along, let's go ahead and get started. Before we get started, I want to direct your attention to the risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading. A little bit about me if you're brand new to the Bulls versus Bears. My name is Dr. Greg McLeod, and I am the founder and CEO of the Elite Traders University. I'm a 28-year trading veteran and trader mentor. I've traded options, futures, stocks, forex, and crypto. I'm one of the foremost authorities on short-term day trading, known as scalping. I spent 8 years as a currency analyst and trader coach at one of the world's largest forex broker dealers in the world, and also graduated from one of the top 20 public universities, number one actually public university in the country, University of California, Los Angeles, UCLA. Go Bruins! And I worked at a prop trading desk, Bank of America, and I had a lifetime teaching credential from the state of California. And I've taught everything from middle school all the way up to college. And I'm a published author, and I've trained thousands of students worldwide. I'm the creator of the Hip and Run system, and I also worked as a trading coach and a trading instructor at various brokers as well. So what I'm saying, this is not to brag on myself, and also I have a PhD in Christian leadership and business. And I'm not saying this to brag, but I challenge you to find anyone on the web with the depth and breadth and length of experience that I've had in the markets. And so I'm uniquely qualified to train you, to teach you, to instruct you, to help you, to guide you in this $6.1 trillion a day and growing market place called the Forex, foreign exchange. So let's go ahead and get right to it. I'm going to share my screen, which I'm doing now, and we're going to go right to one of my favorite tools, one of my favorite trading tools that I've invented, that I had created, called My Market Heat Map. Yes, I did. I created it. I had a series of programmers come together and take one and put together and assemble the most powerful suite of tools on the internet in one place called My Market Heat Map. It's an arrangement of currency pairs by percentage change. Tells me what's hopping, what's popping, what's dropping, and what's not in the market. Green is in the uptrend, red's a downtrend, gray is stay away, moving sideways. And it's my secret weapon for finding, instead of scanning hundreds of charts, I can just look at my market heat map and easily see what's actually moving in the market. Right now, we're having a 50% off sale. Right now, normally it is $99.97 a month. And for a limited time only, it's 50% off for $49.79. And the 6 powerful heat maps um, that you just go to the website for free and you can look at one of them. Right now, the dollar yen is in the top spot, um, but it's great, not up very much. We have Aussie dollar, we have Kiwi dollar, both trending down and making their way down. So those be two currencies I would probably look at shorting. But we won't talk about live trading. We do live trading. I have a Winner's Circle program, which I trade live Tuesdays, Wednesdays, and Thursdays for 2 hours with my high ticket students. But we also have a number of other programs. Forex Foundations Power Trading course. We also have a Forex mentorship, the Pip and Run Forex mentorship, and we also have a Forex Baby Step program as well. So anyway, we have we're going to go right to the economic calendar, and I thought we're going to log in. I think we have right here the economic calendar. We're just going to go through. I call this fund with flags, as you know, because we can look at the flags and we can use the economic calendar to tell us what to trade, what is actually moving, what the big boys are actually looking at trading at for the coming day. So we see Monday, which is right now, it just turned Monday, 2 a.m. And right now we have Eurozone PPI month on month, just was released. Previous number was negative 0.3%. The forecast called for negative 0.2%, but it actually was worse than expected. It fell to negative 1.1%. So it's actually worse because it's PPI. Think of I as inflation. It means that inflation is falling faster than what was expected. It was a medium impact event, and the Monday didn't have any high impact events. So we're going to look to the medium ones, and with the Canadian dollar might be in play. But usually I'm looking at they have these red faces. The medium impact ones usually don't move the market a whole lot. You can see that the heat map really hasn't even moved on the Eurozone PPI, which we're into right now. And so there's a lot of medium announcements, and most of the time they don't really move the market that much. I'm showing you these is because when I skip down to Wednesday, you're going to say, well, Greg, what happened on Monday? What happened on Tuesday? And I'm going to say, not a whole lot, because these are low impact items. The bigger the impact item, the more pips movement we see in the currencies. Okay. And if we can go back to our heat map, we can see that we just had an announcement that was released, and it didn't move the needle on the euro, right? So we can go to our heat map, go to our forex majors, and that announcement would impact the euro significantly. And we can see that the euro did not even budge, 0.02%, 0.01%. The high was 109,886, and then the low was 108,695. So it hasn't really moved a whole lot. So medium impact news doesn't move the market a lot. So if you say, well, Greg, how can we look at the medium term events? This is why. So I'm going to go back and filter these out. And you're going to see that our first high impact item doesn't really happen until Wednesday. So you could actually, so Monday you have off, Tuesday you can have off, and then finally Wednesday we have some high impact news. Okay, so I'm just showing you this to show you that there was nothing really going on, and the news was very low impact. So I can go to filter and just go ahead and uncheck the medium term or medium impact items, and I'm going to save it. Okay. So if you're just now getting Bulls versus Bears, you say, well, Greg, you were late on Bulls versus Bears. You didn't miss much, okay? It was all medium term items for Monday and Tuesday. We don't get a red faced high impact item until Wednesday. And another thing too, I'm traveling. I've been in Texas for a week, helping my twin daughters move into college. This back to school for Prairie View and UT Austin. So I was first in Austin for a couple of days, and then now I'm in the Prairie View near Houston. Was there for about a week, and so now and my daughter requested my assistance for some other things, so I'm going to be here another day as well. So I'm also late getting back, and so that's why Bulls versus Bears is late. You can blame them. No worries. Okay. So here's our impact item. The euro will be back in play at 3:15 a.m. on Wednesday, August 23rd. So maybe basing, you're going to see some accumulation maybe or distribution where people might be accumulating sell orders, right? Euro's in a downtrend. And we probably will see a continuation of that downtrend with this news. We have HCOB manufacturing PMI flash. previous number was 45.1. Look forward to rise to 45.2. And that's the forecast. If it comes up stronger than that, we may see a pop. Now, the trend has been down because the euro is traded against the US dollar. So any positive news for the euro may be only short-lived, maybe a good short-term scalp long, but with the downtrend so strong that that rise could lead to a reversal. So be careful out there trading these pops up in the euro. Okay. So we also have HCOB services PMI flash. It's supposed to rise from 47.1 to 47.3. Again, could lead to a short-term pop in the euro. Might be a movement there in the euro USD. More euro data, the manufacturing PMI and services PMI 38.8 dropped to 38.7 as expected. And the services PMI flash is supposed to drop from 52.3 to 51.5. Okay. The 4:30 a.m., we're going to have a spat of UK news. So the euro and the pound are going to be in play this week. And so during this flat time of probably not much volatility, we're probably going to see positioning in the euro and the pound for the next major move, leg down, and which look probably will see the S&P Global CPS Manufacturing PMI. So these are purchasing managers indexes where they actually survey the purchasing managers and say, hey, you're going to buy more stuff. And if they think the economy is bad, they won't buy any stuff. They don't be stuck with a bunch of stuff it's not selling. But if they are ordering lots of stuff because they feel the economy is going to be improved, well, then that would mean that the economies are strong, and this could be good for the European economy. Okay, so that's usually a telltale sign of recession because no one wants to get stuck with a bunch of stuff when no one is buying, and the purchasing managers will be able to see what the orders are, from different stores or retailers or things like that. And if people are buying things, then it makes sense for them to buy more raw materials and things to make, right? So it looks like they're lightening stuff up, 45.3 to 45. That's a decrease, 51.5 to 50.8. That's a decrease. And for the composite PMI flash, 50.8 to 50.3. So we're seeing a softening of the PMI. And so that could be bearish for the British pound. 9:45 a.m. And even if it's better than expected, it comes out at like 52 or something like that. It'd be a short-term pop against the overall downtrend. Something that you would scalp north and look to trend down. 9:45, we actually start our U.S. news cycle a little late. Usually starts at 8:30, and seeing the news at 9:45 instead of 10 or 8:30 is a little bit different. And so we have PMIs, purchasing managers indexes, coming out of the U.S. You're going to see unchanged for the composite PMI flash from 52 to 52. Services PMI flash 52.3 unchanged, and manufacturing PMI flash 49 rise to 49.4. So that could be bullish for the US dollar. And then we have initial jobless claims are supposed to rise from 239 to 240. And this is a weekly jobs number, and it's very volatile. It changes. And that's at 8:30 on Thursday. Okay. So I guess we go back to the 8:30 news cycle on Thursday. Friday, we have a lot of news. The euro, the dollar, the euro is going to be in play for sure. We have GDP growth rate quarter-on-quarter final. It's supposed to rise from negative 0.1% to zero. Wow, it gets to zero, right? And the growth rate year-on-year final goes from negative 0.2%, stays flat at negative 0.2%. And the IFO business climate is supposed to actually drop from 87.3 to 86.6. Okay. So our interest rates, our The economy seems to be, according to forecasts, is improving, even though the rates have been high. Now, at 10 a.m., we have the 10 a.m. U.S. news cycle, the last announcements of the week. We have the Michigan Consumer Sentiment Final. Go Wolverines, right? It's supposed to drop from 71.6 to 71.1. And we have Fed Chair Powell is going to speak at 10:05. Fridays are not sometimes I like trading on Fridays, but a lot of times I like to be done early. And with Fed Chairman Powell, the chairman of the FOMC, the most powerful central bank on this planet, is going to be speaking on a Friday at 10. Me personally, I would like to be out of the market, flat, fat, and happy, and sipping on an adult beverage on a beach somewhere, not in a market with Fed Powell that could powell the market, right? Just like I've been Bernanke, I've been Greenspanned, I've been yelling, and so I'm not about to get toweled if I've made money all week, which usually that's what I do. Why my students do. 3 p.m. Definitely not gonna be around on Friday, and you shouldn't be either. We have ECB President Lagarde's gonna speak, and it's like, no way, Jose, do not. I'm not saying what you should do, no recommendations, but me personally, I would not be around after 10, after 9. Okay. And then that takes us to the end of the week and some more stuff next week, but we won't talk about that. Let's get into the charts. I know you guys are probably chafing at the bit. Greg, how about those charts? Like, yes, we're going to get into the charts. We're going to get into the charts. And I know that you want to get into the charts. And I want to get into the charts too, if the window would stay open for me. And we have this one. Okay. All right. Blah, blah, blah. Blah, 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 blah. And we are going to do some things here. Okay. So we're going to start with the US dollar index. The US dollar index is a basket of currencies versus the US dollar. And it's one way, since once we figure out what the dollar is doing, like I've said before, you can figure out what the majors are doing with the Aussie dollar, the dollar CAD, the dollar yen, the pound dollar, the Aussie dollar, New Zealand dollar. We're all doing if you can look at the direction of what's going on with the US dollar. And I like looking at the monthly chart, the 50,000-foot view, to see what's going on in the market. And you can see there's lots of twists and turns and loops and ups and downs. We can boil it down to like we're in a really big triangle. Remember all those shapes that you learned when you were a kid? I'll probably make a good webinar, huh? How to shape up your trading with shapes. Right? So we got big moves there, right? Big 160. Can you imagine we're at 160? And then we got all the way down to like 70, 71, right? And then we have some resistance and support levels here. Big round numbers here, like 114 and some. So we're just giving some big support levels, big resistance levels. We won't hit all of them for time's sake. Right. And so we've got most of them, right? And having these big monthly zones, you can see that we had a nice uptrend when the Fed was hiking rates. We were trapped in a range. We broke out. Now we broke down below this 104 area with support. Our return to the scene of the crime. We had a long wick that broke down. We were in a tough consolidation. Low volatility, 1, 2, 3, 4, 5, 6, 7, 8 months. Southside break. Bears are getting excited. Then bulls came in, smack down, smack up. All right, so we got to push up north. And right now we've got a hammer. We talked about candlestick patterns last week. We had a really great webinar. I have a free webinar on Thursdays at 8 p.m. Eastern time where we go deep into we talk about some of the the basic tenets of trading, such as we're going to talk about moving averages this Thursday. So make sure that you tune in, tell a friend, make sure you mark your calendar at 8 p.m. for our program. In fact, let me go ahead and pull that up for you. Elite Traders Universe, Elite Traders Live, Elite Traders Live.com, but it's / if you want REG. Boom. Yeah, so deciphering moving averages and Forex for unparalleled success. Discover how you can be in the room. Again, it's Thursday, August 24th at 8 p.m. Eastern Daylight Time. And you're going to be learning some things about moving averages and how to profit from them. So I look forward to seeing you there. If you want more training from me, you want to get a sample of what I do, how I train people, and if you see this, we give you a nice overview for the hour that you're with us. But if you want more information, we'll show you how you can get involved in the Elite Traders University in one of our programs. That's it may or may not be the right fit for you. I can't make any promises, but you don't want to miss this opportunity to learn more about moving averages and how to profit from them. Okay, just going back to our monthly chart. And in fact, we are trading above the 200 moving average, so that's telling us that it's quite bullish. We drop down to a weekly chart, and we can see how we still moving up week after week. We're making new highs, lots of green candles, nice uptrend, weekly uptrend, and you tell me you want to short the dollar, then you got to come up against this, right? It's an uptrend, right? You want to. All right, moving down to a daily chart. And we can see prices moving higher and higher. And yeah, I mean the rate of change is slowing down a bit with the dojis, but still, it's indecision, prices consolidation. We usually move from low volatility to high volatility. We've already moved sideways for 1, 2, 3, 4 days. The 5th day, 6th day, we could break out and continue. We also have our uptrend trend line has gotten a little bit steeper, right? So it's popping a wheelie there, starting to accelerate. It went from bouncing to bouncing, and it's also crossing the 200 simple moving average on a daily, a very pivotal point, showing that the uptrend is getting stronger, even though the candles aren't really showing that. Dropping down to a 4-hour chart, we can even see that we are making contact with that trend line, and we could see a bounce from that and a continuation toward the 104. Previous support or previous resistance was at 104.17, and we could probably see a move here. So bulls versus bears, I am bullish the dollar. I know it's going to sound like a broken record. It's going to sound like a broken record from now until probably about October. So, and that's going to be very good for you trend traders out there. All right, let's go ahead and look at the euro. The euro is called the anti-dollar. It's also nicknamed fiber, right? You want to get some fiber in your diet. I'm going to remove all the drawings, and then I'm going to start that monthly chart and work our way down. And again, the euro is part of that basket of currencies versus the US dollar, and it's starting to roll over, though not as dramatic. It too is in an uptrend. You can make an argument that this is an uptrend, but we are below the 200 simple moving average, which is different than the dollar, which was above the 200 simple moving average. This is a monthly chart, and we have a shooting star kind of candlestick. Could be some type of evening star reversal pattern if we break this trend line, dropping down to a weekly chart. And we can see that we did get a break of the trend line. Not a very big one, but again, each candle represents 1 week. Each one of these is a week, and we have one week. down, 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 down for 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks of a downtrend, right? So, and we're below the 200, the weekly, the 200 weekly simple moving average. And we go down to a daily, and we can see we're right on the daily, right? Oh, a little bit off, right? So we've been going down for a while, and the momentum is slowing, so we may get some type of a rise or rally. I'll rally up to the trend line, maybe a little bit over the trend line, and then maybe a drop below, right? So bulls versus bears. I'm actually short term, slightly bullish, but medium to long term bearish. And I'm talking about maybe we get something like this, something where for the next 7 to 8 hours, we may, can't be too sure, as we look for some type of a retest of the trend line from the bottom side. And then we could also see a drop. So maybe 1 or 2 days up and then down, right? So I am bearish the euro. So it'd be really easy to look at the pound, GBP USD, which is also in play today or this week. And we're looking for opportunities to sell it to be part of this trend. We're starting again with a monthly chart. And a longer wick, if you imagine this is a very long wick, bulls were high-fiving, high-pawing, or high-hoofing each other, locking horns, and what happened was price came down, sellers stepped in, and now you're left with a long wick, and we could see price roll over from here. You know, we hit this high. You can actually take a fib. And you can see that we nailed that 618. We nailed the 618 and are turning. It's a very strong push higher on the pound. And you can see that price is starting to break that trend line. Still, there's an argument you can make for that we are in an uptrend, but we are below the 200 simple moving average, which is a bearish indication. And if we drop it down to a weekly chart, you can see that we have broken that line barely. We may get some type of a rise in the next 7 to 14 hours up, and then the rest of it we look for a capitulation or drop. So maybe prices rally up into the upper trend line, and then we can see that drop from here, right? Right. So bulls versus bears. I am short term, very short term bullish, like hours bullish, but a day I'm looking for days and weeks bearish, right? Looking at the daily, looking at the 4-hour chart, we are looking at price that is meandering. We had a long wick. We could see some type of a rally, but then we look for prices to pop and drop. Aussie dollar, similar path. It has been fighting the 6,400 area for a really long time. Going to a monthly chart, all drawings, and you can see that we are moving our way down. We're 64.30. Look at this bearish engulfing candle. I talk about engulfing candles during my workshop on candlesticks, illuminating your charts of candlesticks. And this is a prime example. See this big, long red candle? It's an engulfing candle. It's a bearish engulfing candle at that, wiping out the previous 2-3 days of price action, wiped out in this candle. So it's engulfed all this previous price action, working its way down. And, we're looking at maybe a move back down to 60. But be very careful because, after a big move like this, we anticipate some type of profit taking, some type of a rally. Let's take a look at the weekly chart. And you can see that we're working our way back to the old low that we had back on October 17th. And that's at 61.95, and that is roughly 200 pips away. So there's still plenty of meat on the bone here. We just need to back it up and look for an entry where we can get in where this is over and overbought. When this gets overbought, you can use your favorite oscillator to find where it's overbought. And when it starts to turn and come back down, you want to be in it to win it. But again, lots of consolidation here at the 6,400 whole number, round number support. So we may get some type of a rally, and then we have a rally higher, right? Or maybe a good little scalp. But I don't think it goes too high, though. I think the market tie is so strong to the downside that any rally is sellable, and we could see it move back down to that 61.95 area. Okay. So bulls versus bears. I am bearish Aussie dollar. I'll move it to the NZD USD. And even with rate hikes and things going on, we see that does not, against the US dollar, the Kiwi is, it's not just a US dollar story, it's also a China story. Again, China is the largest trading partner to New Zealand and Australia. And China is having a little bit of a spat of a weaker economy with high youth and unemployment, a decrease in foreign exports and demand for Chinese goods, and horrible. They had some flooding in some of its cities. We also have a commercial property crisis where the Evergrande development company went bankrupt. And so, China may have to intervene and pump liquidity into the market or be the buyer of those bonds. So China has a lot of issues, a lot of economic issues. I'm sure that they will rise to the occasion and overcome them. But in the short term, we're seeing anything tied to China much weaker. Chinese stocks weaker. Also, Chinese proxies like New Zealand dollar and Australian dollar are suffering on the heels of the weaker Chinese economy. So we continue to be bulls versus bears. We are bearish the Kiwi versus US dollar. Moving right along to the USD, and we can go to CAD, and we see the pound versus the Canadian dollar. I mean, dollar versus Canadian dollar, moving much higher highs and higher lows. Big bullish green engulfing candle that is more of a morning star, and we have a flag, a bullish flag too on this a monthly chart, and we haven't broken out of the flag yet, but it is we have a flag pole, we have a flag itself, and we look for a breakout and a continuation. Currently trading at 1.3544, and we can see maybe a continuation toward the old high. And once we get a break, we can have the high of November. November high is coming in at 1.39971, and we can see price move up as our first stop before breaking out and moving toward the highs of 2020. And we saw those coming in rather nicely at 1.4652. And we can see this possible break to the north side there, right? So bulls versus bears, dollar CAD, dollars in the front. So if the dollar strength, we look at dollar CAD being bullish. And we can move down to a weekly chart. We can see our flag forming. We also move down to a 4-hour chart too. Maybe a little flattened 4-hour chart. But we want to look for entries on that. Okay, let's look at dollar yen, USD JPY. Moving right along down there. Dollar yen has been a little erratic. And what's new about dollar yen? Right, and looking at that monthly chart, we can see that we are closing in on our old high of 152 roughly, 151.60. And we had a nice scale let's price move up. 45.42 is where we're trading at. Oh, and we're looking for a retest of the 51.60 and maybe a breakout from there. A monthly chart with look for higher highs and higher lows, retesting the highs we saw back on October 17th, 2022, and beyond. After we've just been working our way back up, Okay, we got a daily chart, and we're looking for our chart. And we've been you take a trend line across the top of that. We can look for a break of that for a move back up to even the most recent high that we just had. We pop that in here too at the 46.59, right? So that's about 150 pips away. All right, bulls versus bears. I am bullish dollar yen. All right, moving right along. Let's look at one of my new favorites is gold XAU USD. And gold, an ancient metal, been around for a long time. We're gonna look at the monthly chart. I'm gonna remove all the drawings, and that way we can have a clean chart. See what's going on with gold, and we can see that gold is going down. Gold is priced in dollars. XAU is a symbol for gold, and their old friend, the dollar, USD. Remember, I told you if you know which direction the dollar is going, you know where all the other currencies are going as well, right? And right now, looks like we had like a triple top in our friend gold, right around this 2070 area. Just retest, boom, boom, boom. So now we are looking for maybe push down, continue to drop. And we can actually draw some Fibonacci on this leg here is what we're interested in. Don't think it's going to go all the way back to the old low. It is possible it could return back to the 1616 area back that we had back on November 2022, right? But I don't think we're going to go that far. I think we could probably get down to 1793.97. And that would probably be an interesting place to look at longs in gold. But right now, bulls versus bears, I'm looking for this. Look, we have a bearish head and shoulder pattern on gold on the weekly, and we haven't even hit the target yet. We have just getting started. And I can highlight that for you. It's like, Greg, where is it? I don't see it. It's like, no worries. And there you go. There's your head and shoulders. And we can draw a neckline. And we've just crossed the neckline. Right, we just crossed the neckline. And the 200 simple moving average might be a stop as well. So gold continues to look bearish. We can look down to walk it down to a daily chart. We did break the trend line. We might see price rally up and test the breakout point again. Usually it does that. We would like to see a retest. That'll give us a good risk to reward ratio. But this thing took off like a rocket, right? So we expect it to come back a little bit, come back home. Our TTSC return to the scene of the crime, and we can reshort it at a higher rate. Okay. So bulls versus bears, I am constructively short-term bullish, very short-term, like for maybe a day. And then after that, I'm looking for it to drop. Okay. Again, the dollar is strong. The dollar is who's your daddy right now, and is everybody's daddy. And so the dollar is in control, but might see something different shake out around October, November. Okay. But we only can trade what we can trade now. We're not trading the futures, right? Thank goodness. That's kind of a slow market. Okay, XAU USD. Let's go ahead and take a look at our indices. We can take a look at let's NASDAQ 100. Take a quick look there and go to a monthly chart and get rid of remove our drawings and take a quick gander here, right? And we can see how price failed to make the same high. Or many of us were looking for a double top. We did not. And so we're seeing a bearish engulfing candle on NASDAQ 100. However, it's pretty interesting. We're so close to that area. Price. We did break the trend line, and looks like price could continue to fall. On the monthly, weekly, we can see a pullback, but the pullback is at an angle, and I teach my students that if you see a pullback at an angle, usually means it has more time, more room to go higher. And so I wouldn't be too fooled by the break of the trend line. We could still turn around and break the NASDAQ 100, breaking that trend line and heading higher back to the 1653 area. Okay. So I am actually short-term bullish, medium-term bearish. Okay. Now let's take a look at the S&P 500. SPX 500 is the CFD. It's an instrument that trades along with the U.S. dollar, in parallel with the actual index. So here is the S&P 500, and we can see that I was bullish. I drew inverted head and shoulders and trend line breaks and all that stuff to show that price had a ways to go. And it did. It moved to the old high right there. Price stopped. Didn't make the same high, but dropped. Okay. Many people are going to jump on that as a bearish candle. However, I would like to see it retest the high before it turned. So it might be interesting if we look down to a weekly chart, see what's the structure of this. Again, that looks like a flag pattern, which is pretty bullish, a bullish flag. Price pulling back, and then we see maybe some type of an extension higher. So short-term bullish, medium-term, short-term bearish, medium-term bullish here for the S&P 500. Okay. Okay. And one more, we're going to go BTC USD, and we'll take a quick gander at that. And we'll go to a monthly chart, and we can see that big push down as the US dollar continues to garner strength. And we're seeing, a rejection of the 3,200 area. We saw major rejection there, and we're at 2605, and we hit the 31 area. So let's see if we can get a bounce from there. Here we have actually the trend line did break. The weekly looks bearish, maybe a little harami, maybe short-term bullish. Maybe we see a retest of the breakout area. We broke out down from 31,500. Maybe we get a bounce, a little short-term bounce there, back to that 30,000 area before we continue to make the plunge down. Bulls versus bears, I am short-term bullish, but medium to long-term bearish. I think we go back down to 16,000, 15,000, right? So be careful out there, guys. And remember, you can go, that should be it for me. There's some more. If you want, again, join us for our free webinar Thursday, August 24th at 8 p.m. Eastern Time, and learn how to use moving averages in your trading. In addition, if you would like to find out more about Elite Traders University, you can go over to our website. Go to elitetradersuniversity.com, and there's a number of free resources to help you in your trading. There is a free income boost blueprint that you can access. Click that to download. All you gotta do is share your email address and information with us. We won't share it with anybody else. I probably won't email you. Okay, all right. You probably can't access that. We'll go ahead and see if we can get that fixed. Okay. There's also a free masterclass that you can actually go to and go ahead and claim your spot there. And you could be able to watch that. Okay. Anyway, I want to thank you so much for joining me, and we'll get those things fixed. Go to elitetradersuniversity.com and those links should be fixed. Thanks so much. Bye-bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!